We know that stocks have been on a tear this year despite the global pandemic. And some analysts are saying that the lasting economic damage caused by COVID-19 isn't really being reflected in the stock market. Joining me now is Gareth Soloway. He is president and CFO of InTheMoneyStocks.com. Gareth, I know that you think this market's getting a little frothy. Things are looking a little bubbly here. What are some of the technical signs you're seeing that this market is overheating?
Yeah, it definitely does have that characteristic. The question is, when does it finally kind of top out? And to do that, what we can do is take a look at the charts. And if you look at the S&P 500 chart, you can see that if you take a trend line from the high in 2018, before that big sell-off on the back of the Federal Reserve, threatening to raise interest rates, and you connect it to the March or pre-COVID collapse high, that trend line extends all the way out to where we are currently hitting right now on the S&P 500. So that concerns me because it's predated every major big drop in the market, really going back, to 2018. And then if you look at other factors like insider buying to selling, huge amount of selling from insiders compared to buying. The put-call ratio, which measures how many average investors are buying calls versus puts, is heavily weighted to the call side. Fund managers are overweight stocks, underweight cash, I think for the first time since 2013. All these things, even the IPO stuff going on recently with Airbnb and DoorDash, and those stocks have headed straight lower ever since they opened to the public. So those are all signs of issues within the stock market that kind of raise alarm bells. But again, we know that they can kind of trade up for a while before, the issue begins to be seen in the stock market.
So when that issue begins to be seen in the stock market, how big of a drop are you anticipating? Is this going to be, a correction territory, a drop of 10% or more? And is it going to be a prolonged period of a down market, or is it just going to sort of be a blip on the radar when it happens?
I think you're going to initially see at least a 10% correction. And if we look at that same trend line and you look at the drops we saw bigger than 10% each time. So there's that possibility. But I think you'll get the initial drop, and then we'll see as 2021 goes into the longer period over the course of months, we'll see the market kind of just go sideways, a lot of chop, with the markets kind of getting in a position where the vaccine's getting out there to the public. It's not really that comeback growth story anymore. It's just kind of, okay, well, where's the economy now at this point?
I know that in terms of individual stocks, you have your eye on Tesla. We all do. The stock has just been rocketing skyward. It's going to be added to the S&P 500 as of the close of trading on Friday, so more activity expected there. What's your short-term outlook for Tesla?
I think the hype around the adding to the S&P 500 has to be looked at as a sell the news event. So I think it's down a little bit today. But once those funds add their full positions, I think it's something like 186 million shares they have to be buying. But remember, they bought now for the last, probably last month since that news was announced, and they can still buy after that date as well. So it's not all at one point, but I do expect it to come down. The valuation is incredible. It's gone so much higher than I think I ever thought it would. But one thing I'd like to just touch base on, which is something that kind of I think the general public should understand, is that you had a situation which arguably could be an ethical dilemma for a big institution. And this occurred 5 days before the announcement of a $5 billion offering by Tesla. And Goldman Sachs 5 days before upgraded the stock from basically a hold to a buy and raised the price target to $780 a share, which was a street high. And okay, that's all fine and good, right? Any analyst can do that. But the issue arises when they announced that offering. Who was the lead underwriter? Who's profiting and who's has a motive to push that stock price up? Goldman Sachs. And so I always try to tell the truth to investors out there and kind of give them, pull the curtain aside. Just be wary of these type of things. Upgrades are great, downgrades are great, but there sometimes can be these little nuances, ethical issues, and you can see it here in this situation. And I do think investors deserve to realize that. Hopefully it's not the high on the stock for those investors that bought on that big run up after their upgrade.
All right, we're going to leave it there. Gareth Soloway of InTheMoneyStocks.com. Thanks for being with us.
Thank you so much.